Hello and welcome to The Grant Accountant. My name is Tina Sumler, owner of Sumler Professional Accounting, where we specialize in financial grant management. In this video, I'm going to cover an overview of cost principles. So as a recipient of federal funding, this is something you should become very familiar with. So let's go over what are cost principles, where do you find cost principles, and how to apply them. So what are cost principles? Cost principles can be summarized as rules and criteria that you use to determine whether or not a cost will be allowable on a federal award. These cost principles can be found within the Office of Management and Budget's Uniform Guidance 2 CFR Part 200, Subpart E. And this is applied to state governments, higher education institutions, tribal governments, local governments, and nonprofit organizations. So how do you determine if a cost can be charged to a federal award? Well, this is where the 4 cost principles come into play. So you should be able to check off each one of these, and that will let you know if this should be charged to a federal award or not. So let's go through each one of them. So the cost must be considered allowable. So the cost must be permitted according to the federal and agency regulations, as well as in your award agreement. There is a list of unallowable costs, which are identified in the Uniform Guidance, and I do go over them in a different video. So be sure to look through that list to familiarize yourself with them, and be sure to look through each award agreement that you have. The cost must also be considered allocable. So the cost must directly benefit the award and charge to that award based on the allocation of the benefits received. If the goods or services benefit multiple awards or activities, you must allocate the cost appropriately among the awards based on proportional benefits with adequate documentation. The sponsor could ask for this documentation at any time in addition to an audit or site visit. Now, one thing you cannot do is move expenses from one grant to another just because that grant has money available to expend. That is a huge no-no, because it has to be allocable. It has to directly benefit that award. And if it does not, it is unallowable. It cannot be charged there, and that's that. The cost must also be considered reasonable. A cost is reasonable if, in its nature and amount, it does not exceed the amount of a prudent person under the circumstances prevailing at the time the decision was made to incur the cost. So the cost must be considered a fair price. For example, that is within its market price for comparable goods and services for the geographic area. And the cost must also be considered consistent. All costs must be treated uniformly within your policies and procedures and applied to both federal and non-federal finance costs. So this was just a quick run through of all the cost principles, but please be sure that if you don't adhere to them, that you put yourself at risk of having costs disallowed and receiving penalties or fines. I hope you found this information helpful. If you did, please give the video a thumbs up. If you have any comments, questions, or even topics you'd like to see discussed, put them in the comments below. And be sure to subscribe so that way you'll stay notified of any videos that come out.